Hey traders, let's spend a few minutes reviewing the sectors in this crazy market. I will start with the XLF. This is the banking ETF. The banks start reporting earnings this week on Friday, and they will most certainly impact the whole unit. We have seen them outperform the expectations. I thought they would dip a little bit. Nope, they went straight to the target and then some. They also overcame the failures from February of last year. So clearly they have wind in their sails. Now, they're coming into a pretty big failing zone. Unfortunately, it's wide. I say unfortunately because it's hard to pick a failing level on that. Like if I wanted to find resistance, it's pretty hard. I will find you one though. Anything around 38 to 39 is going to be difficult. I'm focusing my attention to these two candles here back from 2021. They repeat themselves here. So I'm thinking this is the next hurdle to go. And if you want one candle alone, that spans from 39.40 to 37. So that would be one candle from February of 2022. That also is important. The easy answer is that they are in a breakout mode. They could continue on because the zone of resistance is actually just that, a zone, and not a hard line in the sand. In other words, I cannot zoom in to a daily chart and say, oh, okay, they're going to fail here because. The because is too old. Like I showed you two or three of them. They're pretty old to where they're not surgically accurate. Now, historically, my impression is that I've seen them disappoint more as far as stock reaction to the earnings, regardless of how good the earnings are. So we will see how they come out. The easy answer is I wouldn't do anything too drastic. If I wanted to go long and I waited this long, why would I want to get into them before the earnings report themselves? So I would wait out. The energy sector has been in flux for a bit. I'm going to zoom out to a 2-hour candle. They failed because basically the U.S. is pumping a lot, and anything that's the oil sector is suffering from it. For example, the two major components of the XLE are Exxon and Chevron, and their sales line depends heavily on the thing they sell. Unlike Nike that controls shoe prices, Exxon cannot control oil prices. So they are at the mercy of the supply and demand and the commodity price. So here we go at 86 to 87 and a half. It's a failing level. If I look left, that is definitely a neckline that they lost before. So coming into it, those two purple lines, it's the whole section is resistance. And then worse is that they failed there and now they're fighting for support. So the easy statement there is if they don't hold the support, the downside target could be 76, 77 and a half if they're lucky. They have multiple areas of support below that, but they will continue this lower high, lower low trend. The sellers are in control and they're swinging wildly, but they're setting lower lows and lower highs. So I will assume that continues until they actually establish a floor. Signs of that would be if they get to 85 and hold it, and then come back down and hold above this level. So for the next couple of days, if you see them meander higher than 85 and come back, hold 83 and a half and come back, go back to that same level, that purple line, that would be maybe they've bottomed. Maybe they're making the turn. Otherwise, I don't trust it. Selling rallies in this one. The utilities, they got smacked by the rising rates. When the Fed is raising rates, utilities have the people have the impression that utilities is a dividends play for as long as I can remember. And when the rates are rising, then they get competition from the bonds. Like, why would I put my money into stocks and get 3 or 4 or 5% when I can give it to the government to get 6%? And so it didn't make sense. So now that Powell has Powell's comments on December 13th played into the hands of the utilities. That's why you see that large spike. But that's the bad news. What is it going to take to get out of that large spike? I feel like this spike on the 13th placed a heavy burden on the bulls now to overcome. Moreover, look left. Wow, that is a pretty tough spot to be. So I would not be a fan of the utilities up at these levels. Maybe if they dip down to 63, then it would be a trading thing to get back up to 65. Otherwise, there's a chance that 63 will fail, 62 will fail, and they could get in the low 60s, like 60. Not low 60s, closer to 60 than 62. I know it sounds like piddly, dollar here, dollar there, but where's the rush? If I can get better dividends from somewhere else, why would I want to bother with these? That's my take. From a trading perspective, they're not that exciting. From an investment perspective, I just don't see the attraction. All right, XHB, the home builders, it's a complete mystery to me how strong these home builders are in this crazy market. So if there is to be a disaster in the stock market, these are priced for more than perfection. I don't want to judge them all harshly, because if you look at the individual P&Ls, then you can make your call. But this here, the easiest statement is nope, not an obvious point of entry. It's an acronym, NOPE. Nope, not an obvious point of entry. I would leave it. I would say to myself, I missed it. Let's catch it on the flip side. The XLB, the materials are also strong. They're trying to break out, and they can do it. They just need to overcome the recent highs. Taking out 86.40 could get them to 90. Trading wise, I'm more comfortable selling a put or a put spread to see if they can do it, as opposed to buying a call and holding. If I own shares, if I already am long and profitable, I can see that happening. But to start longs here, where can I take my money elsewhere? That's my statement to myself. And there is a decent chance, not a strong chance, but it looks likely that if the markets hiccup, especially, this one will be at 80 or 79. And if the markets break out, of course, it's going to levitate everything. But you can see these arrows played out. I see similar arrows down here. They haven't yet priced out the December 13th Powell spike when everything went crazy. The XLC, I do have a technical short on it. I haven't taken it, but have I? Maybe I have. Anyway, the technical short is not on this chart, but the first arrow played out. The second arrow can also play out, unless they take out the blue line above. So if they take out the blue line above, then actually a little bit higher, then it negates the thesis that I have. The rising wedge, how it's sharply rising like this, makes it vulnerable for dips. And that's what I think will play out if the market stalls a little bit. It doesn't have to fall. If the market stalls, this one will have the opportunity to fall. It has seen strength, especially today, on the back of a few stocks. Just a handful. 2 stocks are almost half of it. Just pay attention to that. And do your homework on the components of each of these things. The XLK, strong bounce after a tough week, but all in all, it's not too shabby. This one, again, is also not an obvious place to chase unless you're a momentum trader. If you can buy the dip and make money from point A to point B, go for it. But for most people that are not very active traders, I would wait for a debacle. And debacle is not that far away. And the debacle is not that serious. So chances are, if they blink or hiccup and don't take another high, it's very easy for them to come back to 176 or 175. I personally wouldn't want to get engaged until they go below 172.5. Maybe it doesn't happen in the next couple of months, so be it. I missed it so far, I'm not jumping in. Are you sensing a theme? Yeah, that's what happens when markets have never been higher. The XLI, I spoke to a couple of people that wanted to short it. It is shortable against the floor that it just placed yesterday, I would say. Let me rephrase. If they lose this candle here, so if they lose 110, it's actually a little bit higher, but let's give them the 110. They can slip to 107 pretty quickly. In fact, I could argue that they already lost it by not recovering 112 and 112.5. So I will rephrase it nicely. If they don't get back above 112.5, they are at risk of drifting lower towards 108 and 107. Okay, that's the statement. The XLY, I thought they would dip and recover, so they dipped, and let's see if they recover. The conversation was, I think, if I wanted to chase them, I would let them dip. I would buy the dip for the recovery opportunity. So if that was the comment you heard from me last, you got your opportunity. Did you get long? And if you did, you have some profits, up 1 or 2% on the stock itself. I don't know your objective. I do want to warn, though, if they fail to recover, break out of 178, they are at risk of doing this, kind of like the other one. That's the byproduct of having these rising wedges. When you don't breathe on the way up, then the longer you go without a correction, the harsher or the more surprising it is the drop. The staples have not had a good time on the way down. They were falling like they were going out of business, and then suddenly they came back into favor. So now they have to tackle the problem areas that caused the debacle. This was incredibly wrong, so they righted the wrong. That's one thing. And then make improvements on that wrong is another thing altogether. Watch how pivotal that area was. We can delete that. It was a floor, and it was a trap door. A roof, they're trying to break out. Signs of improvement there, 73.50. And if they can maintain a higher low trend, they're on their way to get to 75. And then what? Then you have this junk. So starting here, to me, I want easy wins. And yes, this can win. It's winning. But the upside potential is going to run into a wall that's harder than the walls they've been busting down right now. Look at this beautiful trend, though. I wouldn't short it, but I wouldn't chase it blindly. It's all the same answer. I wouldn't chase it blindly because it's a trader's market. We are at all-time highs, effectively. So it's hard to pick good there are no bargains, very few bargains. Okay, this one is shortable against the prior fail. That's it. Nothing against whatever this represents, the XLV. Okay, so here's the story today. In fact, we had a discussion on the XBI, which is relative to this one. Healthcare, biotech, they have an opportunity to break out. This chart has failed. If I go back in time and I ask this person and that person and this person, how did it work out for you last time you went long here? They'll probably go, oh, don't ask, right? Here I am thinking the same thing. Now, one of these times, it will be a breakout. Is this it? I'm asking. So if I wanted to start longs here, I, again, would wait for a dip to get long. If I do get long now, I would leave a lot of room to manage the risk. In other words, I would take a small bite and leave room to add more if I need to. I don't like to go into a prior fail. I'm not that arrogant to say, oh, these people knew better. They should have, they were wrong. I'm right. It's just weird, right? Okay. So there is no weakness. I would be just shorting against the prior fail. And guess what? That's an easy stop loss. As soon as they make a higher high on a convincing closing basis, I'm out. Okay, I tried and I'm out. Here comes the XBI. We had that conversation today in case you missed it. It was attractive to some people to go long because it's breaking out. Plus, I'm told it's a seasonality thing. I doubt seasonality is going to kick in the way it used to usually because these are not normal circumstances. The catalysts that we have now they're not the same. So seasonality, I'm not a big believer, although I do respect it. So the breakout looks substantial. Just today, they showed greens, and on a weekly basis, it's a strong week already. We haven't closed. We still have 30 days, but we'll see. Look left. This was a prior fail multiple times, going back years. We're looking 2019. This is a point of contention. Yes, the pandemic, they did this, but let's say the pandemic was a mistake. So this is still a contentious level, and I still have to respect it. I personally would wait on the longs, but if I do go long, I would use some sort of a complicated options trade that allows me to collect some premiums while I wait for the breakout to happen. All right, folks, this is a quick run through all of the ETFs. We'll try to make this a regular thing on a weekly basis about this time of week. Stay safe out there.